compute. That's where we see this market going, and we think it's going to be potentially the largest, tradable commodity in the world soon.
Yeah, it's crazy numbers at scale. I mean, it makes sense though. Like if AI is gonna, that's insane that you were like so close to the ground on all that happening. But it seems like you're executing on a very similar vision with architect. So could you talk a little bit more about like what you see as the new design space for like speculating on these different parts of the AI infrastructure trade? Because it seems like right now there's no real way to do it, but the companies that are at the forefront of all this AI innovation are going up infinite. But like the actual microstructure of all these markets, you can't really bet on directly. So I guess what's your vision there, and how is Architect kind of like enabling people to speculate on these things?
Yeah, that's exactly right. So if you want exposure right now to the AI economy, I mean, equities are pretty much the main way to do it. If you're bullish on memory, you buy Sandisk, you buy Hynix. If you're bullish on chips, you buy AMD and Nvidia. If you're into the neoclouds, it's CoreWeave. But in terms of the actual commodity underlying this economy, which is really compute itself, there aren't any ways to hedge directly. It's kind of like buying a gold miner stock, but not actually being able to buy spot gold yourself.
Right.
And so at the center of the AI economy is this concept of compute. And let's like drill in a little bit what we're talking about there. When someone is going out to train their next AI model, or they're running an AI model and feeding it prompts and outcomes inference, outcomes tokens, all of that requires renting time or buying time on GPUs, on chips. And so there's entire companies like neoclouds whose entire business model is rack tons of GPUs and large arrays inside of data centers, power them, cool them, do everything you need to do, and then rent them out by the hour or by the year sometimes for GPUs. And so you'll hear things quoted like Nvidia B300 GPUs are now going for $6.25 per hour. For a 1-year contract over 1,000 GPUs, 1024 GPUs. And so that price per hour is the thing that we've built a futures product on so people can speculate on it and can hedge it. So for example, if you're a cloud and you have capacity that you want to sell and your entire business model depends on that rental price not going down too much over time. Like what if you put all those B300s in your data center and it's currently $6.50 an hour, but in a few years it's $1.50 an hour. All of a sudden, you're going to make so much less money from your chips. So you could sell futures to hedge that price and lock it in. Or if you're an inference provider, like you've got Venice on the show. If you're like taking in chips time and you're producing tokens, you're a buyer of compute. Well, you might be worried that what if B300 time goes to $20 an hour? All of a sudden, your cost basis is going to go up so much. And you might want to hedge out some of that risk by buying futures today. And then, of course, if you just want to be able to speculate on, I think inference, I think compute's going to go up, I think compute's going to go down, this is a product that lets you do that.
Very cool. I mean, it seems like it's definitely needed in the market. Have you guys started to see traction with large companies use this yet? Or how early stage is Architect now?
So we're right now in direct conversations with the US regulators to get this launched. No one's launched it yet here. We do have those products on our Bermuda exchange right now alongside the perpetuals, so people can onboard and start to trade them. But we're hoping to be the first to launch them. And we have had lots of conversations now with companies in the space looking to do exactly this, looking to hedge their either short or long-term costs using these products. Some of them want to engage in more like over-the-counter block trades. Some of them are going to want to trade on the order book, going buying and selling back and forth the way you would for any product. And so we're hoping to support both in short order. And then once the futures have enough volume, we're going to launch options as well. So imagine, buying a put option to protect yourself against the downside risk of, compute going down in your cluster. That's the kind of products that we're going to be able to offer pretty soon.
Damn, that's sick. That's very cool. It seems like I've seen so many of these deals with like between Nvidia and OpenAI, like all the labs and everything. And it feels like every time one of these deals is happening, there should be like something kind of similar substance happening on these markets. But right now, there's no way for people to kind of like, I guess, react to things happening in real time. Do you think that like this AI compute will be as popular, like as traded as much as something like gold, silver, all these other commodity markets?
Yeah, I really do. One of the stats I've been quoting, I wrote up something on Twitter a little while ago on X, was that in any commodities market, the amount of yearly volume in commodity futures is a multiple of the actual production yearly of the underlying commodity.
Right.
So if you look at electricity futures, which trade primarily on ICE, another exchange called Nodal,
Mhm.
the futures trade something like 2.5 to 3 times the amount of electricity production per year. For crude oil, for West Texas Intermediate crude, for Brent oil, the total is something like 15 times. And so for gold, it's crazy. It's like 80,000 times the amount of gold produced per year is traded in futures. Of course, it's like hard to mine gold. But for compute, we're thinking it's going to be somewhere in between electricity and oil as kind of a good way to think about it. And so maybe that's 5x. So if you think about the amount of capital expenditure this year on compute, it's something like 800 billion. It's expected to go up to something like 2 or 3 trillion by 2030. If it's
Yeah.
going to be 5 times, that's 10 to 15 trillion per year in derivatives trading on compute. That's where we see this market going, and we think it's going to be potentially the largest, tradable commodity in the world soon.
Yeah, it's crazy numbers at scale. I mean, it makes sense though. Like if AI is going to have such a profound impact on society the way that we think it is, then it makes sense that the trading of compute would be just as huge in size. And I guess it's something that's going to probably just continue to get more and more aggressive with how much these companies are invested. Because it doesn't seem like any of the hyperscalers or anything are slowing down their investments at all.
No, and you saw in the big announcement from Nvidia now a couple of days ago that they're putting together a consortium of large companies to be able to basically backstop the production, the purchase of large amounts of chips. They want to put together $500 billion to allow people to take on loans and go out and build more data centers with more chips to be able to rent them out. And then Nvidia would basically take a share of that rental income. The reason that has to exist is because there is no instrument that lets people understand the forward curve for compute. And by that, I mean, what do people expect rental prices to be in 1 quarter, in 4 quarters, in 3 years for those
Yeah,
chips?
yeah.
And there's just no way to hedge that risk or to even price it.
Yeah.
And so the best that we can do is Nvidia just coming out and say, I will guarantee the minimum price there, as sort of like almost like the buyer of last resort. But that's kind of a strange thing for a company to have to do when they're the ones building and selling the chips in the first place. Like that should be an abstracted out risk that is taken on by financial companies, hedge funds, banks, et cetera. I mean, that's how it is everywhere else. And so, I definitely worry that without good hedging instruments, you end up with like a subprime crisis one day where everyone's got tons of loans on the books, the prices of compute, plummet for whatever reason. And who's left holding the bag then?
Yeah, because I mean, there's no way. It's also an industry where there's no way really to predict what's going to happen with it. Like we don't know what the next model, how much better the next model is going to be than the current one. We don't know like the cost of everything, how much cheaper stuff is going to get. It's something that moves so fast that having ways to kind of hedge it is probably more important with this than any other commodity, to be honest. But at least with stuff like gold and silver, like you generally know how much is going to come into supply and like how it trades. But like with something like this, it's just such new tech. It's very hard to kind of predict. That makes a ton of sense.
Gold's been gold forever.
Yeah.
Even when we started this journey,